You know that feeling right before a storm hits? When the air gets still, the birds go quiet, and everything just stops? That's exactly where we are right now in the precious metals market. And if you're not paying attention, you're about to miss the biggest wealth transfer opportunity of this decade. Silver just crossed $65 an ounce. Let that sink in for a moment. The metal that most people think of as gold's poor cousin just gained over 120% this year alone. Gold? Up 64%. These aren't normal moves. These are the kind of moves that happen right before everything changes. But here's what nobody's talking about. This isn't the storm. This is the calm before it. And the people who understand what's really happening right now are positioning themselves for what comes next. Let me show you something that should terrify every central banker on the planet. For the first time in modern history, gold reserves are about to face a real audit. Not the kind of audit where they check paperwork and nod their heads. A real audit. The kind where they actually have to prove the gold exists. Think about that for a second. Why would that be scary? Why would central banks be nervous about proving they have what they say they have? Because for decades, the gold market has operated on trust, on paper promises, on the assumption that when someone says they have gold, they actually have it. That assumption is about to be tested, and silver is going to force the issue. Here's why. Silver has always been gold's truth serum. When the paper markets start to crack, silver moves first. It moves faster. It moves harder. And right now, silver is screaming that something is very, very wrong with the system. The industrial demand for silver has exploded. Artificial intelligence, solar panels, electric vehicles, 5G infrastructure. Every single technology that's supposed to define our future needs silver. Not wants it, needs it. There's no substitute for silver in most of these applications. You can't just swap it out for something cheaper. And here's the problem. We're running out, not in some distant future. Right now. The supply deficit in silver is real. Mines can't keep up with demand. Recycling can't fill the gap. And the above-ground stockpiles that everyone assumed would last forever, they're disappearing. Investment demand is crushing what's left. When silver was trading at $20, people thought it was expensive. At 30, they said it was overvalued. At 40, they called it a bubble. Now it's at 65 and climbing. And suddenly everyone's trying to figure out how to get their hands on physical metal. But the physical metal isn't there. Not in the quantities people think. And that's where this gets interesting. The paper market for silver is massive. Futures contracts, ETFs, certificates. All these financial instruments that represent silver. That promise you can exchange them for silver whenever you want. The problem is, there's way more paper silver than actual silver. Way more. It's like a bank. Banks don't keep all your money in the vault. They lend most of it out, betting that not everyone will want their money at the same time. That works fine until everyone shows up at once. Then you have a bank run. We're heading toward a silver run. And when it happens, it's going to expose something much bigger. Because if the paper silver market breaks, people are going to start asking questions about the paper gold market. And then they're going to start asking questions about everything else. Central banks know this. That's why they've been buying gold at record pace. Not paper gold, physical gold, bars in vaults, metal they can touch. They're not buying because they think gold is a good investment. They're buying because they know what's coming. Look at what's happening with BRICS. Brazil, Russia, India, China, South Africa. These countries represent almost half the world's population. And they're building a new financial system. One that doesn't depend on the dollar. One that's backed by gold. You think that's a coincidence? You think they're doing that for fun? They're doing it because they see the same thing the central banks see. The dollar-based system is breaking. The debt is unsustainable. The money printing can't continue forever. And when it stops, everything changes. The United States has been the reserve currency of the world since the end of World War II. That gave us an incredible advantage. We could print money and export our inflation to everyone else. We could run massive deficits and not worry about the consequences. We could sanction countries and cut them off from the financial system. But that power came with a responsibility, and we abused it. We printed too much. We sanctioned too many countries. We weaponized the dollar. And now the world is looking for alternatives. Gold is that alternative. Not because it's perfect, but because it's the one thing every country trusts. You can't print more gold. You can't sanction gold. You can't devalue gold with monetary policy. It just is what it is. And silver? Silver is gold's enforcer, because silver is small enough and cheap enough that regular people can buy it. When regular people start buying physical silver and gold, they drain the system. They expose the fraud. They force the reckoning. That's what's happening right now. Regular people are waking up. They're looking at their retirement accounts and realizing that the numbers might be big, but the purchasing power is shrinking. They're watching food prices double. Energy costs spike. Housing become unaffordable. And they're asking themselves, what's the point of having money if it doesn't buy anything? So they're buying gold. They're buying silver. They're taking delivery of physical metal. And every ounce they take out of the system is one less ounce available for the next person. The smart money figured this out years ago. Hedge funds, family offices, sovereign wealth funds. They've been accumulating quietly, not making noise, not driving up prices, just steadily buying and storing. But now the secret's out. The price action is attracting attention, and attention creates momentum. Momentum creates FOMO, fear of missing out. And FOMO creates buying pressure that overwhelms the system. We saw this in the 70s. Gold went from $35 to over $800. Silver went from $1.50 to $50. People thought it was a bubble. They thought it was irrational, but it wasn't. It was the market repricing monetary metals to reflect the loss of confidence in fiat currency. Then Paul Volcker came in, raised interest rates to 20%, broke the back of inflation, broke the back of the gold market. And for 40 years, gold and silver went sideways. People forgot why they mattered. They forgot what they represented. But the conditions that created the 70s bull market never went away. They just got papered over. More debt, more money printing, more financial engineering. And now we're back where we started. Except this time, the debt is bigger, the money printing is bigger, and the consequences are going to be bigger. Quick aside here. If you're sitting on $100,000 or more in retirement accounts, you might want to look into how gold IRAs work. I put together a free guide that covers how to get physical gold into your retirement account without tax penalties. It's in the description. Worth checking out if that's relevant to your situation. Anyway, back to what's happening next. The Federal Reserve is trapped. They can't raise rates without crashing the economy. They can't lower rates without fueling inflation. They can't keep rates where they are without watching the debt spiral out of control. Every option is bad. Every choice has consequences. And the market knows it. That's why gold keeps hitting new highs. That's why silver is outperforming. That's why central banks are buying. They're all preparing for the same thing. A reset, a repricing, a moment when the old system breaks and a new one has to be built. The question isn't if this happens. The question is when. And what you do before it happens determines whether you're protected or exposed. Think about what happened in 2008. The financial crisis. Banks failing, markets crashing, people losing their homes, their jobs, their savings. The government stepped in with bailouts, trillions of dollars created out of thin air. And it worked, sort of. It stopped the immediate crisis, but it didn't fix the underlying problems. It just made them bigger. Now we're facing those problems again, except this time the bailouts are going to be even bigger. The money printing is going to be even more extreme, and the consequences are going to be even more severe. Gold hit its previous all-time high in 2011, $1,900. Then it spent a decade going nowhere. People said gold was dead, that it was a relic, that Bitcoin was the new gold. But gold wasn't dead. It was just waiting for the next crisis, the next moment when people remembered why it matters. That moment is now. Gold is above $3,000, and it's not stopping. Because the crisis isn't stopping. The debt isn't stopping. The money printing isn't stopping. And the loss of confidence in the system isn't stopping. Silver is telling us the same story, just louder. When silver moves like this, it's not because of industrial demand alone. It's because investors are piling in, because they see what's coming, because they want protection. The COMEX is the exchange where most silver futures trade. It's where the price gets set, and right now the COMEX is under pressure. Open interest is high, delivery demands are rising, and the amount of physical silver backing those contracts is shrinking. What happens when more people demand delivery than there is silver to deliver? The exchange either defaults or changes the rules. They've done it before. In the 80s, they changed margin requirements to kill the Hunt brothers' silver corner. They'll do it again if they have to. But here's the thing. Changing the rules doesn't create more silver. It just proves that the paper market is a fraud. And when people realize that, They stop trusting paper. They demand physical. And that makes the problem worse. The London Bullion Market Association, the LBMA, is facing the same issue. They're the other major hub for precious metals trading, and they're running into the same problem. Not enough physical metal to back the paper claims. This is why the audit matters. Because once someone actually checks, once someone demands proof, the whole house of cards comes down. And silver is going to be the trigger, because silver is smaller, more volatile, easier to squeeze. When the silver market breaks, it's going to send shockwaves through the entire financial system. Gold will spike, bond markets will panic, currency markets will convulse, and people will finally understand that the system they trusted was built on sand. The geopolitical situation makes this worse. Trade wars, sanctions, conflicts. Every time the United States uses the dollar as a weapon, it gives other countries a reason to move away from the dollar. And every time they move away from the dollar, they move toward gold. China has been accumulating gold for years. Russia, too. They're not doing it because they love gold. They're doing it because they want independence from the dollar system. They want the ability to trade without U.S. approval. And gold gives them that. The BRICS nations are building a gold-backed trade settlement system. Not a gold-backed currency. A settlement system. That means when they trade with each other, they can settle in gold instead of dollars. That reduces demand for dollars. And when demand for dollars falls, the value of dollars falls. The United States has been able to run massive deficits because the world needs dollars. They need dollars to buy oil, to trade internationally, to hold as reserves. But if that changes, if the world doesn't need as many dollars, then all those dollars come flooding back home. And that creates inflation. Massive inflation. This is the nightmare scenario for the Fed. Not a recession, not a market crash, inflation they can't control. Because if inflation gets out of hand, they have to raise rates. And if they raise rates, they crash the economy and explode the debt. They're trapped. Gold and silver are the escape hatch. Not for the Fed. For you. Because when the currency loses value, hard assets hold value. When the system breaks, tangible wealth survives. When trust evaporates, gold and silver remain. History is full of examples. Weimar Germany, Zimbabwe, Venezuela, Argentina. Every time a government prints too much money, the currency collapses. And every time the currency collapses, people flee to gold and silver. We're not Zimbabwe. We're not Weimar Germany. But we're on the same path, just moving slower. The debt to GDP ratio is over 130%. That's higher than it was after World War II. And we're not coming off a war that destroyed our competitors. We're facing competitors who are stronger than ever. The interest on the debt is now over $1 trillion a year. That's more than we spend on defense, more than we spend on most discretionary programs. And it's growing. Every year it gets bigger. Every year it takes up more of the budget. Eventually, it crowds out everything else. When that happens, the government has 3 choices: default on the debt, cut spending dramatically, or print money to pay the bills. Default is political suicide. Cutting spending is political suicide. So they'll print. They always print. And when they print, gold goes up, silver goes up, real assets go up. Because people understand that the money is worth less, that the promises are empty, that the only safety is in things that can't be printed. The calm we're experiencing right now is deceptive. Prices are rising, yes, but they're rising in an orderly way. People are still confident the system works. They still believe the Fed has everything under control. They still think this is just another cycle. It's not. This is different. The debt is too high. The imbalances are too large. The geopolitical shifts are too significant. Something has to give. And when it does, the moves we've seen so far will look tiny. Silver at $65 is just the beginning. If we see a real supply squeeze, if the paper market breaks, silver could go to 100, 200, higher. Not because silver is suddenly more valuable, because the currency is suddenly less valuable. Gold at 3,000 is just the beginning. If we see a real loss of confidence in the dollar, if central banks accelerate their buying, gold could go to 5,000, 10,000, higher. Not because gold is suddenly more useful, because the alternatives are suddenly less trustworthy. The people who understand this are positioning now, not waiting for confirmation, not waiting for the mainstream media to tell them it's safe. They're acting while there's still time, while physical metal is still available, while prices are still reasonable relative to where they're going. You have to ask yourself a question. What's the downside of being wrong? If you buy gold and silver now, and the system doesn't break, what happens? You own assets that have held value for thousands of years. You have insurance against inflation. You have a hedge against uncertainty. That's not a bad outcome. But what's the downside of being right and not acting? If the system does break, if the currency does collapse, if gold and silver do spike, and you don't have any, you're exposed, completely exposed. Your savings evaporate. Your retirement disappears. Your purchasing power vanishes. That's the asymmetric bet. The risk of being wrong and acting is small. The risk of being right and not acting is catastrophic. So why wouldn't you act? The storm is coming. The signs are everywhere. Record central bank buying, supply deficits, geopolitical shifts, debt spirals, currency debasement, all the ingredients are in place. All the dominoes are lined up, and the first ones are already falling. Silver is the canary in the coal mine. It's telling us the air is getting thin, that danger is close, that we need to get out before it's too late. Gold is confirming the message, steady, relentless, climbing higher every day. The institutions know. The central banks know. The smart money knows. The only question is, do you know? And more importantly, are you going to do something about it? This isn't about getting rich quick. This isn't about speculation or trading. This is about preservation, about protecting what you've worked for, about making sure that when the storm hits, you're not swept away with everyone else. The calm is ending. The pressure is building. The market is coiling. And when it releases, the move is going to be violent, fast, overwhelming. The people who are prepared will be fine. The people who aren't will be devastated. You still have time. Not a lot, but some. Use it. Educate yourself. Understand what's happening. Make a plan. Take action. Because once the storm hits, it's too late. Once the panic starts, the metal disappears. Once the system breaks, the options vanish. This is your warning. This is your moment. The calm before the monetary storm. What you do next determines everything.